Good morning, welcome to IG's Early Morning Call. It's Monday the 6th of February. Let's take a look at the headlines after we saw a new all-time record high on Friday for the London FTSE 100. Today we've got markets pulling back a little bit from the highs that we saw on Friday. All this as a result of a strong non-farm payroll number pushing up the dollar, and that's a bit of a headwind for some of these equity indices. Meanwhile, taking a look at earnings this week, we've got Disney and Uber Technologies on the slate for the details coming through for fourth quarter. Let's take a look at what's happening with volatility. We have what is effectively our third day in a row of gains at the moment. You can see back up above the 20 level, 20.4. The long-term drawdown is still very much in place. If you wanted to get an idea as to perhaps maybe how to deal with this in terms of where we go from here, if you drew a fib from that point there, you can get an idea as to where the point of resistance is likely to be, and it's at the 61.8% retracement at 22.9. So that would be the area where you'd be looking potentially to see some headwinds in this upward move. So do we have some further upside to go for volatility? Well, possibly. I think people looking for an excuse to sell these equity markets, and you can see in fact in today's session we have a little bit of a sell going on. But you can see this move up that we've seen in the FTSE 100. Intraday on Friday, we had a 79.13.7 print, an all-time record high for the FTSE. It is still only up about 17% from the lows that we saw back on the 13th of October last year. So that hasn't yet technically gone into a bull market. But we do have bull markets in many of the other European indices. You can see here the German DAX Thursday last week, up 31.7% from the lows we saw there back in October for the German DAX. And in second day in a row of losses, you can see at the moment on the German index. Again, same sort of thing going on here. I don't see any major change in what is essentially a market which continues to trend higher. And technically, you'd still be wanting not to be short in the long term. But again, you look at a fib on the levels around about the 4,500 level. You get below 4,500. You're then looking at a more meaningful sell-off on the German DAX. French CAC 40, a new recent 9-month high, in fact, peaking above this right shoulder of this head and shoulders pattern we saw back in beginning of 2022. We're currently trading levels not seen since the beginning of January last year on the French markets. That being said, a little bit of a pullback today at 71.70. So the message I want to get across is the fact that we've got markets going into today's session slightly softer. And I think that's as I say, the broad message that should be established. Overnight in Asia, many of the markets showing some weakness. That being said, the Nikkei 225 is one of the few areas where we saw some upward movement, a margin of something like around about 6.6%, as you can see. Hang Seng Stock Index, another day of relatively hefty declines, down over 2%. ASX 200 also on the way down in the session in today's trade. Let me just take a look at what's happening in Hong Kong, because the Hong Kong markets have been finding the going tough over the last couple of weeks or so since we came out of the Lunar New Year. It's been a negative swing to this market. The Hang Seng Stock Index currently trading at 21,182. 24-hour markets on the IG platform continue to see this market trend lower. We do have around about 90 minutes of the cash session still to go in Hong Kong. MACD pointing down, indicating I think that maybe this drop is now beginning to get a little bit further steam on the downside. Is this the pattern we should be looking at for the European markets? Was to say that's yet to develop, but the Hang Seng Stock Index now on a full 3 days of declines that we have at the moment on the Hang Seng. Let's take a look at what's been happening on Wall Street. Dow Industrials, S&P 500, and the Nasdaq all down on Friday. You'll remember if we look back to the non-farm payroll data we saw last week, where we saw some very strong upside, and this gives some expectation that potentially perhaps maybe the Fed is yet still far from having done on interest rate rises. And you can see if you look at the Nasdaq particularly, that 1.6% drop, you can see that we saw a new high not seen since the 26th of August 2022 on Thursday, and then came Friday's unwind because of that strong non-farm payroll data, and you can see we're opening lower, or rather we have a lower print on the 24-hour markets, establishing our foothold on this week's trading. So pressure seems to be building again today. and the same for the Dow, 33,808. So the message I want to convey is that it is these markets that are on the way down across the board. And you get companies like Coinbase, for example. We saw a 16% move around on Coinbase's move on Friday, just to show you where things were and where they came from. In fact, at one point, Coinbase did trade intraday, the highest we've seen since August last year, but then came that unwind. We've got 16.52% drop from the highs for Coinbase. So technology stocks really taking it on the chin on Friday's session. So let's just recap on what's been happening with this dollar, because I think it's an interesting trade to follow on through for today and indeed this week. It strengthened on Friday on the back of that strong US jobs report for the month of January. It did way off the top of expectations. In case you missed it, we saw more than 500,000 jobs having been created. We were expecting 185,000. December revised to 260,000. The previous print had been for 223. So you can see the way in which this came off the top of expectations. I think the boldest expectation on the Bloomberg terminal on Friday was something like 460,000. So it was even way off the top of the most hawkish expectation. The unemployment rate falling to 3.4% from 3.5% in the month of December. And I think all this goes to show and underscore why we saw a lift-off for the dollar. Let's take a look at where we are today. And indeed, this little doji star candle here, you can see establishing us on a foothold on Monday's session, builds on the big gains we saw on Friday. We'd already seen a turnaround on Thursday for the US dollar after having seen the lowest print for the dollar since April 2022. We saw this move up that we've seen. Again, where do we go from here? I've yet to be convinced that this is a substantial and long-held move on the way up. I'd want to see further evidence to suggest that there's a reason to continue to buy into the dollar and not just to see what the Fed wants to do in terms of waiting until it establishes just how much impact that it's made on the economy because these steep interest rate rises we saw at the back end of last year. Remember last week, the Federal Reserve going for another 25 basis point interest rate rise. I think there's still more interest rate rises to come, potentially lifting the dollar. But of course, at the same time, we've got the European Central Bank and the Bank of England continuing to lift interest rates at a greater speed now than the US Fed. Talking about what's happening with the economic data, I wanted just to quickly look ahead to Friday this week, where we get the release of the fourth quarter GDP number for the UK economy. And it'll be a key number because that'll be the number that'll establish whether or not the UK economy has gone into recession. You'll remember that we saw in Q3, we saw a reversal of growth, a contraction of 0.3% on the quarterly numbers. If we get a negative number on Friday for the fourth quarter number, that will then mean that the UK is already technically in recession. Remember last week we saw from the Bank of England expectations that if we do go into a recession, which is the best case expected, it will be shallower than what otherwise or had previously been expected. So you can see at the moment we've got money buying into sterling. In today's session, we've seen the lowest print of sterling for earlier on today since the 6th of January. So we've got a 1 month low for sterling at 120.60, but at the moment at least it's being supported at those recently held low levels. Just a quick update on what's happening with the euro dollar. Talking about that rise in the US dollar, and this is putting pressure on the euro. This line of support at 107.87 was the high that we saw established here back on the 30th of May. That was the area of resistance. That is now support, currently trading at 107.89, so just a tad above that line of support. Watching for that to see whether or not that's going to hold. If it doesn't, potentially we then have the opportunity, I think, then to sell it on down to this level down here at 104.83. Technically, that would be the next area to watch out for, but I'd be wanting to see a candle close below the 107.87 before taking a short print all the way down onto that level. So that's what's happening with the euro dollar trade. Just wanted to update you as well on what's happening with the Japanese yen. The yen is weakening in today's session. You can see it's a bit of a gap up from the move up that we saw for the dollar against many currencies on Friday. The dollar yen trading at 131.74. We're outside of this sloping band or channel, if you like, that we've been following. And that move that we saw on Friday taking us out in a very bold move on the way up, with that dollar gaining against that Japanese currency. Now, what's happening with the dollar means that we've also got a trade to go round into on the Precious metals markets, second day in a row of declines on Friday. You can see a little bit of a snapback today at 1875, but this really as a result of that strengthening US dollar. Let's take a look at some of the economic data out we've seen so far today. Germany, factory orders have been out, rising by 3.2% in December, month on month, after a 5.3% drop in the previous month. And this beat market expectations of a 2% rise. 10 a.m. this morning, we get Eurozone retail sales for the month of December. Economists expecting a 2.5% fall compared to a November figure, down 2.7%. Now, we've now passed the peak of the US earnings season for the fourth quarter. The market is still awaiting a few big numbers to come this week. Let's start, first of all, with tomorrow. We've got Hertz Global. Wednesday, we've got Walt Disney and Uber Technologies. Thursday, Philip Morris International, PepsiCo, and Lyft. But let's take a look in some detail at a couple of those stocks. I wanted to take a look at what's going on with Walt Disney, first of all. The upcoming results to be published on Wednesday after the US markets close will mark the first quarter with Bob Iger back at the helm. This is the chart for Disney. The vertical dotted line is the point at which Bob Iger came back into the business. And you can see after a little bit of weakness following on from that, we've seen liftoff since the lows that we had back on the 29th of December. It has been an absolutely storming start to 2023 for the stock of Disney. And this line here, which is the high that we saw in trade last Thursday at 113.60, when it reports earnings on Wednesday, I should say that the stock, if it does see some strong earnings coming through, I can easily see this area of resistance being beaten, and we'll simply see what happens. On Bob Iger's call back following the immediate dismissal of Bob Chapek. Iger had previously served as CEO of the group from 2005 to 2020. So far as the numbers are concerned, analysts expect earnings of 79 cents a share on revenues of $23.43 billion. Subscription numbers for Disney Plus, Hulu, and ESPN will again be the main focus of the event, I suspect. The group's parks and recreation services had a big return to growth in 2022, with people going back out after those lockdowns, and markets will be looking to see whether the group managed to keep momentum going. The other chart I think it's worth looking at is that of Uber Technologies, and indeed on Friday we have seen this move up that we saw at the back end of last week, the highest intraday print since the 15th of September, and the best close that we've seen in 5 months for Uber Technologies. Uber recorded a net loss of $1.2 billion, 512 million of which was attributable to revelations of Uber's equity investments. However, the company beat estimates for revenue, which grew by 72% year over year, and reported that adjusted EBITDA exceeded its guidance of $440 to $470 million. So I think there's a good reason to look positively into these numbers. As for the fourth quarter, the market expects a loss per share of 18 cents on revenues of almost $8.5 billion. The market will also be closely looking for the number of monthly active users, the number of trips, and the number of customers who have subscribed to Uber One. So some of the data points to watch out for those two companies reporting earnings on Wednesday. There's just been an announcement this morning as well from Dell. Dell is not an all-session stock, unlike Disney and Uber. Dell Technologies is the latest tech company to cut jobs. It's made an announcement this morning that it is to shed 6,500 positions out of a total of 133,000 employees. That works out around about 5% of the workforce will be losing their jobs in an effort to cut costs. So I think Dell, another company, along with a lot of other tech businesses, shedding jobs. Now let's take a look at what's happening with the oil prices and what happened on Friday with the Baker Hughes rig count. Oil prices lost nearly $7 last week, especially after the NFP data as well. Last week, Baker Hughes' total rig count fell by 12 to 759, at its lowest since the end of July 2022. The number of oil rigs in operation fell by 10 to 599. But if you look at what's happening with US crude, there's almost a total retracement of this Fibonacci that I drew from the lows that we had back on the 5th of January. And it's been almost a complete total capitulation of all that we've seen in terms of gains on the oil markets. Currently trading at 74.05. A little bit of interest in buying this at the moment, but I think now we've gone below that 75.04, 76.4% retracement, there would certainly seem to be more excuse to sell this market, possibly breaking this line of support at 72.63. If you do get a break of that, you're then down to levels then not seen since the middle of December last year. So watching out for that move on US crude. Just one other area of the market, just want to follow up on, or two other areas I should say. First of all is copper. Copper today down back below the 9,000 level, 89.43. I think some of this upside impetus that we had was on expectations that with China opening up, there will be some instant extra demand. That doesn't seem to have come through just yet. So there's a little bit of softness in the price of copper, significantly possibly taking it below the 9,000 level. The other area of the market, just want to follow up on, and I guess in part, this is one of the reasons why we saw a turnaround in Coinbase on Friday, amongst other stocks in this particular area. Bitcoin has now on its fifth day in a row of declines at 22,851. That's it. We've got about 15 minutes to start before the European markets in the session today, and we're looking for losses across the board so far as the European markets are concerned, as we see a pullback from that record high that we saw on Friday for the FTSE 100. In terms of where we go next, do join us at 10:30 this morning on the IG platform for Charting the Markets. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.